All right, welcome back. Time for the call of the day. It's American Airlines, upgraded to Outperform at Macquarie. $48 is the price target. That's 20% upside from here. Shares under pressure today. The stock is still on pace, though, for its best month since January. Sarat, you own it. It's down 24% year to date.
I do not own American. I sold American in the early part of this year. I own United and Delta.
Okay.
I don't disagree with this call, but I will tell you that you got to watch out for a couple of things in American. They're unhedged, so if oil goes up, that's going to hurt them. Also, in terms of management, Delta and then United are better management. So, what?
Too much exposure domestically for American Airlines. I don't know if that's one of the reasons why you're not in it, but I think the exposure domestically is a problem for them. Not enough exposure outside. United Airlines is certainly a place where I would want to be. They said they're going to cut capacity, right?
And
American Airlines.
All the airlines rallied last week.
But is that the right strategy?
Look, I agree with you. I think this is the value play of the airlines, but airlines buy their name or value. So I would stick with Delta, which I think is the best management. And if you want to nibble United and you want true value, go after American. But this is a trade. If this thing jumps, then you got to get it.
I still have a tag end. I haven't sold it all. I sold 90% of it. I'd love the stock get back to the mid-40s, and I would sell more of it. They all don't hedge like they used to. American doesn't hedge at all. United's barely hedged, and the hedges they've had, they've lost money on. Fuel costs are going to go higher. They're not going to be able to do anything about it. And they come in one quarter, we're going to add 8%, 4% capacity. Next quarter, we're cutting capacity. Are these managements that you want to own?
If the demand is there.
And and one final point. The only reason it's up 24% is that it's down significantly off its highs in the 50s.
The airlines have not traded that well recently, okay? And partly it's because of fuel, which, notwithstanding what you said, I think looks like it's flatlined here. It's also the idea that if you're going to have trade issues, then maybe demand's going to go down. I don't think either of those two things are going to happen. I don't think you're going to have fuel costs going meaningfully higher from here, and I don't think you're going to get any recessionary drop-off. Now, I'm going to go back at you, not back at you, Joe, but actually my favorite pick is Alaska Airlines, and you're going to say, as you just said a second ago, it's all domestic. It is all domestic. But when you talk about a value play, you like to find things that are undiscovered. They merged with Virgin America a couple of years ago, and they're coming to the end of that, okay? Whenever you have a merger like this, the integration takes forever, the costs are higher, but they're now coming to the end of that. The costs should drop. The revenues are going to be fine, if not higher, based on what I just said, and so the earnings are going to be much higher than what the estimates are. That's my call.
You made a great point, and in terms of fuel costs, that they're not going much higher. See, the bet I have to make in owning these...
Which means, by the way, that the hedging doesn't matter.
Right, but the bet I have to make in owning these is where fuel costs are going to be. Frankly, I'd rather buy fuel than these companies and just own the commodities straight out.
Or buy something that's got a story behind it, like Alaska Airlines.
Well, you got Alaska. I think United has that story because they're still integrating, and Delta has a story because they're actually...
Integrating with who? Continental?
Yeah, they're still going through their system.
From 8 years ago?
Three years
crazy.
ago.
No, it was United's trading well.